All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan.
Today we're going to finally dive into this Alibaba Investor Day 2021 presentations, and boy oh boy was there presentations. There was 8 total presentations that were like 30 slides apiece.
So did you have fun putting this together is what you're saying?
I did, and there was like over an hour of kind of talking time by this CEO, deputy CFO, and the CEO. It was quite an interesting thing to try to get a whole picture of Alibaba Corporation and where their plans are for the future. But you guys,
Nice. So if you like this kind of entertaining stockbroking content where it's two stupid guys trying to figure a thing out, we're going to dive into Baba.
With that, we'll get to it.
Two stupid guys trade stocks.
All right. So basically,
Vinny,
I broke this down into 3
what are all
different
those stuffed animals?
So the stuffed animals, those are actually the mascots for some of the Alibaba subsidiaries. Like, each unit has their own like little caricature. I don't know them to know which one is which, but that's what they represent.
So instead of like Apple having a logo, they have like a bunny?
Yes. Yeah.
That's pretty awesome. Okay.
See a little logo on the little bunny's like shirt too. That helps tell you which one it is.
Got it.
Yeah, very interesting. Basically, with the recent kind of, there's obviously the political stuff as far as Alibaba goes, but the business itself has kind of come into question in a couple of ways. Mostly because their most recent earnings quarter, they showed core commerce with only a 3% year-over-year growth. And that's certainly concerning, right? They have other business lines, but like their core kind of commerce unit only grew at 3%, which is not great. This is their kind of investor day where they're trying to show you how they plan to remedy that. Right?
Okay.
And it comes down to like kind of a 3-pronged approach from basically what I gathered from looking through all this stuff was what they're doing with the Chinese core commerce, what they're doing with the Alibaba international growth, and then Alibaba Cloud. Right.
Okay.
So, this is kind of the concern here, right? Now, Alibaba is the dominant e-commerce company within China. However, as you grow and scale, it's harder to grow in terms of like your size, right? It's much easier to double when you had $100 in sales to double to 200. You only have to find $100 in sales, or 100 new customers. Whereas when you're massive corporation, it's much harder to continue growing at that rate.
You're describing Fubo.
Yeah, they have great growth opportunities.
I hate it. Yeah.
So this is from their presentation. They highlighted about 17.9%. I did this math here to show how many users they added from September 2018 to September 2019. So pretty sizable growth. Now, when we look forward a year from September 2020 to 2021, we're only looking at 7.4% growth. In terms of the number of users has gone down as they've achieved a larger portion of the market, and the growth rate has decelerated. Right.
Okay.
So they talk a little bit about uncertainties here that are potential risks or things that they're looking to address. It's kind of funny. I think they hit it down here in the corner. Market competition is definitely a big one with the rise of JD.com and Pinduoduo. Alibaba's portion of the Chinese e-commerce pie has certainly diminished over time.
Right. Was that growth on the previous slide, was that users or revenue?
That was users.
Users. Okay.
Yeah. Yeah, well, there's definitely some changing consumer demands. They have impact from the pandemic, supply chain issues, and then also this regulatory policy is kind of hints at the whole uncertainty with the Chinese Communist Party. Now, this is kind of what they're hoping or hanging on as far as like their saving grace. Look at the age distribution here. In terms of penetration within the markets, you have a much larger penetration with younger folks. Makes good sense, right? Grandma, grandpa don't use Amazon here in the U.S. nearly as much as people in their 20s do, right?
Right. I get everything on Amazon.
Yeah, exactly. So as time kind of evolves here, you're going to see this continue to be their trend where they're going to, this aging group is going to become more affluent over time, and that'll be they'll be able to increase their average revenue per user by that methodology.
Okay.
So they actually did a cohort study, which was interesting. So a cohort study is where you take a group of people and you follow them through a period of time. And they were able to show that this cohort, let's say, certain people born in 1992, right? That would be like a cohort. As they watched them evolve through this 5-year timeline, the amount of money they spent like 3x, which increasing the average revenue per user, and the categories in which they purchased also evolved during that time period, which is interesting.
Okay.
Yeah, younger folks, they electronics and cosmetics and some books. As they kind of became adults, they bought cars, they bought homes. They started drinking with their friends, or to go to sleep at night like Dylan does. They had bought more home
decor, becoming adults, growing up.
Solid plan, but the categories changed. So that's what they're able to look at now. They've achieved such a scale that they have so much data on people that they're able to tailor their kind of e-commerce solutions to what the consumers want.
Right.
And now this was interesting too. Like, did you know that they have like a version of Amazon Prime, basically?
Is it like a loyalty subscription once a year type of thing?
Yeah.
I know JD has it as well, correct?
Yeah. Theirs is called 88 VIP members. But look at the amount of money that these VIP members spend compared to their average user, over 8 times.
Okay.
Yeah.
Yeah. I mean, that's pretty solid.
Pretty impressive.
Do we know how many of their core buyers, how many of them are 88 VIP members?
So they have about 50 million members at this point of 88
50
VIP
million
members.
Okay.
Yeah, I think that's a slide that's a little bit later on the presentation. The interesting thing too is, much like Amazon observed, that you get this acceleration in terms of average revenue per user when someone becomes a VIP member, whereas they're looking at ARPU going up about 30% on average.
ARPU 30%?
Yeah, about 30% more revenue per user when they become a VIP member.
I'm trying to find JD's growth rate. Do you know? That for users?
Not off the top of my head, no.
Okay, I'm trying to find it.
And then you also have pretty high retention rate, over 80%. I'm not sure what Amazon Prime is. That'd be an interesting comparison point with Amazon Prime's retention rate is. Personally, I signed up for it once and I've never canceled it. So
yeah, same. Also, they have like shows now and all whole different stuff.
Yep. Yeah, exactly. So this is that growth rate there for the 88 VIP. They went from 30 million up to 50 million over the last year basically, and they're hoping to target about 100 million people in the future is what they think they can achieve.
I have your answer for Amazon. 93% retention rate over the first year, 98% over 2 years.
Wow, that's impressive.
So you get it, you don't leave.
Yeah, that is very impressive. So this is kind of the other one, like rung, I guess, of Alibaba as far as like their continued growth. So basically, within China, they're hoping to capture more revenue per user and to evolve as their consumer base evolves and continue getting more revenue. Now, internationally, this all comes down to Lazada, right? Southeast Asia. This is all about Alibaba becoming the dominant e-commerce company within Southeast Asia. And the tremendous growth, because it's a very, very early stage kind of e-commerce environment in Southeast Asia. Now, much like Alibaba in original, there's this multi-pronged approach that they're employing here with Lazada, where they're having the marketplace, they're also having this payment system and the logistics. So they're hitting them a few different ways. So that's the basic premise of Alibaba itself, whereas you create this flywheel where you have the online stores, you have a logistics operation to deliver these products, you deliver these products cheaply and quickly, and then you're also going to start processing payments.
The processing payments is going to be huge.
Yeah, very much so. I mean, you have this opportunity where it's an emerging market, and you have the ability to kind of be an early adopter within there. So.
Does processing payments, would that be similar to like these new finance companies where you can finance like literally anything, which I highly disagree with anyone doing that, just to be very clear.
The Affirms of the world, if you will.
Affirm, essentially Affirm.
Yeah, I'm not sure if they offer that particular feature through Lazada or not, but through Alipay, I understand they do.
They do. Okay.
This is the equivalent of Alipay, just outside of
China. Such a stupid feature, but whatever.
Well, for a consumer standpoint. Yeah. And this kind of highlights in terms of how large, Lazada actually has the potential to be here. much larger than you would probably realize in terms of the number of users using their base, right? Obviously, you see Amazon, Shopee, JD, Flipkart, and then Lazada. It's bigger than people think, I think.
Yeah, so they have Alibaba, China Core, and Lazada, and they're both top 7. And
Exactly.
AliExpress.
Yeah, I know. Well, you're looking at the number of people using it, right? There's a lot of people there, but the people there aren't spending the same amount of money as, say, like an American consumer does, right? That's why when you're looking at it over here in terms of the gross merchandise volume, Amazon is significantly larger, and Lazada is all the way down here now.
Right.
Yeah, because they're earlier stage economy, basically. What they have a large consumer base in terms of the people that are using their platform, they're just not spending as much. Now, this is what they're looking at as far as like a growth rate in that Southeast Asia e-commerce market. So pretty tremendous. You're looking at 27% compound annual growth rate, which is impressive over the 5 years.
It's very good.
Yeah. So, that they're in that market, their, market share is rather sizable, and that market is growing pretty tremendously as you kind of see this gentrification of the Southeast Asia market. It's funny. I wanted to look through Amazon's presentation to see if I could find a similar image, but you've ever heard like Jeff Bezos talk about the flywheel effect?
Yeah. I think we've gone over it before in a video.
It's mentioned, it's been come up before, but that's basically what you're seeing here illustrated too, is this flywheel effect. And as we kind of hinted at before, where you have these multiple kind of multi-pronged approach where you have the payment system, you have logistics, and you also have the e-commerce side of the whole thing. But that's what they're highlighting, is that they're trying to build a Southeast Asia flywheel.
Right.
And now where they think this can get to. They think they can ultimately achieve 300 million users, and then it can $100 billion in gross merchandise volume, which is impressive, right?
I mean,
you're talking about, say Apple Corporation has about $450 billion a year in terms of, actual sales, right? So just their vision for Lazada, which is their Southeast Asia, you're looking at about a quarter of the size of Apple in terms of sales per year,
which as a shareholder makes me feel great.
Yeah, it's very interesting. And one of the things that they kind of talked about with they also are like reorganizing their business in terms of their segments, breaking it down into multiple segments. I didn't put that slide in here. I thought it was interesting in that they broke out China commerce from like this kind of international commerce. And I think that may well be a strategy in the event that there is some pressure put on by the Chinese Communist Party where, Alibaba will have entities that are, kind of separate and distinct, if you will, and outside.
Yeah, it's a way to combat all that issues.
Exactly. Alibaba Cloud here. So this is the other segment that they're looking for their future growth. They had a few slides here looking at the economy and like where we are as far as like the world and comparing like China and the U.S. and that sort of stuff, which I thought was interesting. But obviously China not smaller than the U.S. at this point, but still growing, whereas the U.S. kind of had a little bit of a step back there as far as like GDP goes. Granted, the world has been a very
shots fired here. Jeez.
I'd say a very chaotic place for the last couple of years. So relying on this sort of data can, I don't know, it's not a smooth transition at this point in time. It's very jerky.
Fair.
But the digital economy still has a fair amount of room to grow for sure. So that's what they're looking at as far as like their ability to grow this Alibaba Cloud. This slide was kind of funny to me too. I like how they label them vendor A, vendor M, vendor O, vendor G. Do you want to guess what those companies might be?
Amazon. I don't know what M is.
Microsoft.
Oh, Microsoft. Oh, geez. Okay. Google. O is what's O?
Oracle.
Yeah. Oh, I got it. Okay. It took me a little bit.
Yeah. These are the other big cloud players in the world. That was a very thinly veiled.
That's super funny. Actually.
Yeah. It's like, okay, you might as well not even. They might as well put their logos on here. But Ali Cloud very, very large, in companies. Number three, you're looking at in the world overall, as far as like their cloud presence. They have just over the last year transitioned to positive like EBITDA cash flow, which is really impressive and something I like to see. And they're still growing well. They are lagging behind some of the other major ones, Microsoft and Amazon, in terms of their growth rate, but still, they have plenty of room to run. They are like the largest like cloud provider within Asia, and Asia is obviously still a more emerging market than the United States is at this point.
Yeah, I didn't realize it was world, so I was trying to come up with companies in Asia for M. I was like, I don't know that one.
Yeah, it makes sense. The cloud is a pretty kind of global competitive platform, right? Now, in terms of the growth here, this is kind of what we were talking about. So, U.S. Cloud growth 21% CAGR is what they're predicting, which is impressive, right? 21% CAGR. Whereas Asia, you're seeing an even more aggressive CAGR here of 42 transitioning down to 37% over the next 5 years.
Yeah.
So the market itself there is still earlier, more immature, more room for growth.
Right.
Which kind of makes their underperformance look a little bit worse, but still have a lot of opportunity.
Definitely can. Yeah.
Just got to see if they can capitalize on it. But this is basically what I was saying here. Number one in China, number one in Asia, number three globally, just trailing Microsoft and Google, Microsoft and Amazon.
Do they address their underperformance at any point during this?
Not particularly. They do talk about a lot of things that they're doing within cloud. A lot of it was pretty technical in terms of, they have their new chipset. They have like a AI based algorithm system within their Ali Cloud picture. That sort of stuff. I think it's kind of hard to evaluate as someone that's not like within that cloud space. So it wasn't something that I was really able to assess, I guess.
Okay.
Yeah. But this is what we were talking about here. So $70 billion RMB dollars in terms of their revenue for the last 12 months. And then they do have a positive EBITDA here, 173 million RMB. Looking at pretty broad customer base here, solid 40% CAGR over the last 3 years. And if you look at, the A-listed companies basically within China, the majority of them do business with Ali Cloud. And they're actually getting more and more of that market.
Okay, that's pretty huge.
Yeah, and that's pretty much it as far as like things that I took from the presentations in terms of where Alibaba is trying to derive their growth from. In terms, as we see the Chinese core commerce slow down a little bit, or the growth rate decelerate, I should say.
So the biggest problem that I see with this that's why I was looking up the users. So you want to share my screen? Want to look at this real quick?
Yeah.
This is JD's users.
Okay.
So they went up 33% year over year.
Yeah.
Baba went up 7%.
Yeah.
That's a little bit nerve-wracking.
It is, but you got to remember Alibaba still, as far as number of users, is actually more than double this.
It is. It is more than double for sure. It absolutely is.
I would say the total number of people within China with internet access per their analysis is like about 1.2 billion. And they have just under 1 billion monthly active users. So they've few people in China have access to the internet that aren't monthly active users as far as with Alibaba.
And there's definitely some overlap. Some are just using both. Yeah.
Yeah, I understand too. It gets a little bit hairy in that, if someone uses your system on multiple devices too, that's a little bit harder for them to kind of parse out that data.
Right. Okay. That makes sense.
Yeah. But they've definitely hit a point where, almost everyone there has like a Alibaba like access, So It's harder for them to continue growing their user base there. They just have to extract more value from the people that they do have there, which is what they're planning to do as the consumers transition over time.
So the question becomes, Vinny, if someone gifted you $10,000, you're going to buy more Baba shares? Or are you going to put it somewhere else? That's what the people want to hear, man.
This is the funny part, right? So my Abby V shares got called away from a covered call on Friday. So now I have like $12,000 in cash in that account.
All right. So real scenario, you just got gifted. Well, not gifted. You just got $12,000 that was allocated somewhere else. Now it's free money.
Yeah, I know.
Vinny, what are you going to do with that $12,000?
I don't know. I don't want to overexpose myself though, the position I have right now, I'm comfortable with. just over 100 shares or so total, at this point, which represents about $12,000. So, I mean, I could theoretically double down and consume, lower my cost basis there. But I'm not sure yet. I, the geopolitical risk definitely is something that holds me back from going full sale. Like, when I bought into like Apple, I went full, like, floated the boat sort of thing. Right now, I'm at about, this is a little bit under 8%. So I could certainly conceivably buy some more shares of Alibaba. I might take it up to 35, buy another 35 shares in my main account. So I'll have 100 shares in that main account. That way I'll be able to sell some covered calls against it. That's somewhere in the between, which is reasonable for me, I think. That might be what I do.
Okay. All right. Fair
Yeah.
enough.
This definitely, this whole investor day presentation definitely made me optimistic about their opportunities. However, I found it kind of lacking in current actionable data. I would have loved to see if they had said, like, you know what, we're going to add another $10 billion to our share buybacks. That would have been a fantastic news.
Yeah. Also, because their price is so low, it seems like a fantastic time to do that.
It would be, and they are considering a considerable amount of cash, so they certainly have the opportunity to do so. They still have a share buyback. I think it was authorized for $15 or $20 billion. That's currently ongoing. That they're still, repurchasing shares under. But it would have been nice to see maybe if they would have added a little bit to that in this point in time.
Right. Fair enough. All right, guys.
Yeah.
Let us know if you're going to buy Baba in the comments, or if you're going to buy JD, or neither. That's I should throw that in there.
That's always an option. All right, guys. Catch you on the next one.